right. Am I live yet? Right, perfect. Welcome to the stream, everyone. Nice to have you all here. Hopefully, you all are enjoying your weekend. Let me just make a quick tweet and we can begin. Let me know in the comments or in this section question tab if you want me to look at any pair or any questions you may have. I'll be happy to answer that as well. Just give me a minute and we'll begin. Oh, well, yeah, the YouTube link is a bit messed up. All right, definitely not an issue. Great, so once again, welcome to the stream. So we'll be discussing over where our expectations are on the higher time frames for price for the following week and how it did play out in the previous week as well. Okay, so let's first begin with dollar index and let's start with the weekly time frame. So let me just get all of these down to just this current time frame and we can move on to the weekly time frame. All right, so dollar index has been moving quite clearly with this dealing range. All right, so we have taken out sell side liquidity here on the weekly time frame, and we have taken out buy side liquidity here on the weekly time frame as well. So what does this mean? This means that price is now going to gravitate towards the 50% of the dealing range. All right, so this is how a dealing range is established. We have price taking over sell side, moves higher, takes over buy side. So this high and this low becomes your dealing range. All right, so the 50% will be the draw for price. So from here, you can see it moves all the way through here to the 50%. And you can see a consolidation here in the week number 1, week number 2, week number 3, and week number 4, and the weeks after. Now, why does that happen? Now, you can make a case that it has not really been consolidating. You can say that price has taken out, let's say, this low. So we've taken out sell side liquidity here. We have returned into a fair value gap here. And even now, we have been moving higher or somewhat here, right? We have returned into another bullish fair value gap here. Okay, so this is your fair value gap right there. So price has returned that as well. So you can make a case for that, but that doesn't really mean that price is going to expand, right? It just means that it's consolidating because you can see the high from this high right there and this low right here. You can see that most of the time, the weekly candles have spent their time inside this range, right? So you can see it's developing a range. So this means that price is consolidating, okay? So what has price done on dollar index? We have taken out previous week's high, okay? And moved towards previous week's low, right? That's basically all that price has done. And this is really why I say focus on the previous week's highs and lows and the previous day's highs and lows. That'll give you a clear draw on liquidity, all right? So you just be able to figure out where price is going to reverse and form the high of the week, low of the week. The weekly chart really does tell you most of it. So let's move on to the daily time frame. And this is where things get a bit more interesting. We had this volume imbalance, right? Which I did mark out as your bearish fair value gap. But this is your volume imbalance, and this will be your fair value gap, okay? Right there. So if you extend this, you can see that is really where price got to. Price took a lot of time to fill this volume imbalance, all right? So it took its own time. We tapped into it once, moves lower, takes out sell side, and this low as well, pushes all the way through, leaves a nice bullish fair value gap. And this is really where the first live stream was conducted. And I told you that I expect price to take out this low right here. Okay, you can see right there, price taps it and expands higher, takes out buy side into a bearish fair value gap in the daily time frame. Okay, and that is where the high of the week has formed. Now, it is not just going to be this daily level, it is also a previous week's high. Okay, so you have to be considerate of that. So always do your analysis in the form of a top-down manner. You have weekly, daily, and then the 4-hour. Okay, so just focus it on that manner. All right, great. So what has price done now? Price has taken out buy side and it's moved lower to this bullish daily fair value gap. All right. Now, why did it bounce off of here? Simple reason: the 50% of fair value gaps are always sensitive, especially on the daily time frame. Okay, so right there, you see this 50% level. That is really where price bounced off of. Now, if you would ask me, RH, where is price moving next, right? You say that you've been quite confident with price moving lower. That's happened. Consolidation is happening as well. The low from here to this high has been called out of the university, but because I didn't stream on YouTube then, so where do I believe price is going next? I really don't know. All right. Price has been consolidating from this dealing range right here. So if you consider the weekly dealing range here as well, you can see that it has retraced to premium, taken out previous week's high. That's a good time to short on the intraday perspective. Now, price has pushed lower into a bullish weekly fair value gap. All right. Now, if you've learned ICT for a while, you clearly know that whenever there is a bullish fair value gap, after price takes sell side liquidity in discount, we should be bullish, right? Especially if the dealing range as well is in discount. But we cannot make that assumption here because price has taken out buy side liquidity before and price has also taken out sell side liquidity before. So the best way to move forward would be to remain neutral here. Okay. Now, when will I change my bias? If price opens here on Monday, which is tomorrow, pushes all the way higher, closes above this current weekly high, right? So this high should be protected. But if price closes above it, let's say on the daily time frame or on the 4-hour time frame, then I'll consider myself bullish and target this high. All right. But if price closes through this bullish fair value gap, probably below this opening price right there, clearly confirms that this was a retracement into premium and price needs to expand lower to this low, then I will be bearish. Okay. So we should get a lot more information for the next week's live stream. But for now, we are going to remain neutral on dollar index. All right. So let's move to Euro USD and have a look at the daily time frame. This is from previous week's live stream as well. Clear dealing range on the daily time frame. You can see price has taken liquidity here and here. That is why we start the swing low, right? This is your swing low. This is where the real move begins. And that is why we have marked out our premium and discount from here. All right. This is why we don't mark it out from here. We mark it out from here. So price is retraced into discount, tapped it once, started moving higher, pushed lower once again. And if you have seen my post on the weekly profiles, you clearly know what's happening here. Price is taken out Monday's low, Tuesday's low, Wednesday's low. All of them has been taken out on Thursday. Liquidity pools have been swept out. There is SMT divergence at these lows. This is your manipulation and Friday is your distribution. So where was your draw for price on Friday? This daily bearish fair value gap right there. Okay, you can see all of these engineered liquidity. Price manipulates all of them on Thursday. Friday is just an easy expansion to this daily fair value gap. So the easiest day to trade or the easiest trade day to form your bias would be on Friday the 29th. All right. So price has done that now. Where do I expect Euro USD as well? Once again, same as dollar index and they're inversely correlated pairs. So we are going to be neutral on Euro USD as well. All right. So if price closes above this daily fair value gap, we can expect higher prices to this high, or else we should probably push lower to take out these lows. All right. So now is the correct time to be neutral. You can just divide this range to the 50% here. You can see that we are right around the 50%. So clear rule would be, an easy rule would be, whenever price is around 50%, you usually stay out. Wait for price to show you the clear direction, show you the clear intended move it wants to make, and then you can position yourself. All right. Let's move to GBP USD and the weekly time frame right here. Okay. So GBP, we are actually bearish on this pair. We have taken out weekly equal highs. Equal lows have been, or relative equal lows have been engineered. Price is pushed up higher on the 11th of May. Price takes out liquidity, expands lower. Why we are bearish is because we have a weekly bearish fair value gap. Okay, so price has filled this bullish fair value gap right there, closed through it. Right there, you can see that we have closed through it, takes our previous week's low, pushes higher, closes right there. And the current week, we open into it, fill this fair value gap, not completely, but we have, and we've closed somewhere around it. Okay, so GU, I'm leaning bearish. This weekly time frame is quite clear. We should definitely start pushing lower from here. All right, so just pay attention to the weekly and the daily time frames. Okay, so if you're ever wondering on why my accuracy is really high, why I'm able to predict price and call out these reversals, right, exactly at the tops and lows, it's because I'm always focused on the daily, the weekly, and the 4 hour time frame. Okay, the 4 hour is going to be for intraday. So if you're not going to trade intraday, you don't need to focus on that. And the 4 hour, I kind of go through it as every day proceeds, but I'm really able to call out price on the higher time frames because I'm focused on the weekly and the daily time frame. So always make sure, no matter what you do, keep your weekly and the daily time frames in mind, keep your levels in mind, and whenever the new week begins, it's quite easy to just mark out the previous week's highs and lows. You already have that, and the previous day's highs and lows as well. And a clear concept by ICT, which I quite agree with, is wait for Monday's range to develop. All right. So don't really push on a Monday because price usually takes out Monday's highs and lows before it intends to move quite well. Right. It really doesn't form your weekly highs and lows. Right. The high of the week, the low of the week is not going to be formed on a Monday. Okay. Especially if you're trading Forex. On futures, it's quite a different story. But when you're trading Forex, always make sure to mark out your previous week's highs and lows, your previous day's highs and lows. Just wait for price to develop. And after that, you can make your clear decision on that. Okay. So just for a quick recap before we move into indices, dollar index, we are neutral. Euro USD, we are neutral as well. And GU, we are leaning bearish. Okay. When will I be convinced that we are moving towards these lows? As soon as price closes below this opening price. Okay. So keep your eye on this opening price right there. Once price closes through it, GU, you can expect price to move to these levels. So we'll discuss that probably in the next week's live stream. So let's move on to indices and we'll begin with NASDAQ, right? So once again, quite easy. I did post this on Twitter as well. This is your weekly candle. This is where price manipulates below previous week's low into a fair value gap. Current week expands, right? So I did make a post and everyone did say that higher prices are in due, which is quite right. Most of you got it right. I'm not really surprised. We are really expanding to new all-time highs. And you can also clearly mark out your power of 3. You have accumulation right here on this candle. You have manipulation right here on this candle. And this is your distribution. So this is where we even expected price to open, probably form the wick. It quite didn't, just expanded through. All right. So let's move to the daily time frame. And my draw for NASDAQ was $30,000, which is a whole number. And price will usually gravitate towards these levels, which it did, but it did it on Tuesday, right? Didn't really expect that. I expected price to probably consolidate on Tuesday, but Monday was a US bank holiday, so that's how it went. Now, let's just focus on Tuesday, Wednesday, Thursday, and Friday. This was discussed the previous week. Once price goes through it, as I mentioned, we will expand higher. That's exactly what happened on Thursday. Friday right there, that was a tap in. Tuesday, Monday was a bank holiday. Tuesday, prices expanded through. All right. During these times, you probably will not get a setup, but you should be quite comfortable with that because not every day will price take previous day's highs and lows and react successfully out of it. But we did have that on Thursday, right? So just by using the same exact annotations as we used for Euro, let me just clear all of this up. What do we have here? We have Thursday, price takes out Wednesday's low, and your draw is going to be Wednesday's high on Friday, right? The exact fractal nature of price, you can see this on the weekly time frame, exactly this, right? This is your 11th May, 18th May, and 26th May. So just the exact same thing. Consider this to be Wednesday, Thursday, and Friday, right? Let me just go to the daily time frame. You can visualize it right here. This is your Wednesday, Thursday, and Friday, right? That's the fractal nature of price, where price is going to behave with the same exact mechanisms on all time frames, right? It's not just a weekly, daily, or the monthly. It's not the 1 minute, the 5 minute, or the 15 minute. It's always going to repeat in the same exact mechanism, right? So clear manipulation on Thursday, Friday's expansion, quite easy. On the 4-hour time frame, you can see that we have engineered a couple of highs here, and price has expanded through. And if you're day trading, right? So let me just go a bit into a day trade, which you could have taken here. Just for the sake of the stream, I always want to keep this for 2 higher time frames, but let's just do it today, right? So you always want to profile this on your 4-hour time frame, okay? So that's the first thing. Now, what do you see on this 4-hour time frame, right? Just this structure right here. The first thing you would notice is price has tapped into this 4-hour value gap, all right? Price has tapped into it, and once price does tap into it and we have equal highs above, or in this case, buy side liquidity, you are going to be bullish, all right? So price pushes higher, takes out this high, right? Once it does that, what is your next move? Your next move is going to be bearish, right? You want to be bearish on the day trading perspective, not on the high time frames, just for a day trade, because we have taken out buy side liquidity, which means retail will most likely be trying to buy this breakout, right? And they will most likely be unsuccessful. Now, this fair value gap has done its job and pushed price higher. Okay. Now, what do? You move to the 4-hour time frame, and you will probably mark out the session's highs and lows, which is going to be your London session, your Asia session, and of course your true day opening price. Okay. So in this case, what do you see here? You have your true day opening price right there, which is going to be your 12 a.m. Eastern Standard Time. Price expands higher. You can see that this is the furthest price could possibly get to from the true day open. So which means whenever price is above the true day open, you're bearish. So here you would be bearish, but would you be more bearish here, or would you be more bearish here? More here, right? So, and especially this is New York session. So you know that usually price does manipulate in New York, and price will most likely move lower because the intended direction, or this would be a Judas swing, your false move higher for New York to manipulate and take all the positions out within one candle. So this 10 a.m. candle right here, see the price has taken this high, 9 a.m. high, move to the 15-minute first. See that we are pushed all the way through. 10 a.m. is your manipulation. 15-minute bullish for value gap will not hold because New York is in a manipulation phase, right? It's not in a distribution phase. If it was, then price would most likely do this. But since it's manipulation, we will look for lows. And in this case, you have equal lows right there, here and here. That's where price gets to. On the 5-minute time frame, you see a clear manipulation as well at 10 a.m. open. And you can also consider your 9:30 a.m. open, right? This is quite important whenever you're trading indices, to have a 9:30 a.m. opening price. That's really when your aggressive moves begin. So always mark out your 9:30 a.m. open and watch what price does. So in this case, you see that price has taken out these highs, right? All of these highs right there at 9:30 a.m. and tries to close bearish, right? So if you're trying to just trade based off of your doji candle patterns or reversal candle patterns, you will not be successful because you need price to confirm lower prices. Okay, so this doji candle will really not do much. So when would I be bearish here to target these equal lows? Is if price would close through these two candles. All right, so if I just have your replay button right there, you can see that this is really when I would be bearish. Okay, because price would then close through the change in state of delivery, confirm that price wants to get to these lows, and that is when I would take a trade. But whenever you see these candles or you see these closures, right, these concepts that go around where they just say if price takes off a high, closes through it, I'm going to be bearish, it really doesn't work. You really need to wait for the change in state of delivery, and that is why it's important. That is really why we have the change in state of delivery. Okay, that is your confirmation that price is going to reverse and then going to move in the opposite direction. Now, price will push up higher, take out these highs, and what do you see here? What is your confirmation for change in state of delivery here? You don't have your up close candles, right? But what you do have is your bullish fair value gaps. So you know whenever we are in a bullish price delivery, price should respect this bullish fair value gaps and move higher. So in this case, it doesn't, right? So you have your bullish fair value gaps, you have one right here, and you have one right there. You also have one right about here, all right? So if you do want to take a shot, what you would do is wait for price. Let me just clean things up. Yeah, you would actually wait for price to close through a bullish fair value gap, right? If you want to take a shot, and you would target these equal lows. Now, did price close through the first one? Yes, it did. So you might feel like, okay, it might push up from here, right? So what you do is you just wait for another closure right there. So you can just probably enter right there, place your stop right above this high, or probably at this level right here, and target these lows, right? Probably how you would do it. That's really how I would do it. Probably enter quite higher. And right there, that is your entry. You can see that price gets into your bullish fair value gap, which will act as resistance now, all right? So this is really true support being tested as resistance. You can see this fair value gap as well. We have a nice reaction. And does price follow through? No, it does not, and it reaches our objective, all right? Now, why does price not push higher? Because we are manipulating in New York, okay? If New York was distribution, then you would buy right here and target this high, right? This is New York manipulation, what just occurred. If this was New York distribution, you would buy right here, place your stop above the swing low, and you would target this high, all right? So it's really not just learning how these patterns work, because let me tell you this firsthand, patterns do repeat regardless of which cycle price is in. So your edge is usually when you are able to predict what cycle we are in. So if we know that price is going to manipulate, then you know that you have to take a short position in this case, right? But the pattern which you see, the candles that you will see, will print the exact same way as it would do when price needs to move higher, right? So if you wanted to if you were waiting for price to expand higher from here, and sometimes it does, why that does happen is because you lack the understanding of price, all right? That's basically what it is. Whenever you have a clear understanding that, okay, we are going to manipulate until we take out these equal lows, then you know that the direction is going to be lower and you would take a short position no matter what, right? So whenever you see these bullish candles here, you will not really be, how do I say this? You will not really be tempted to switch sides, right? So you'll always want to stay in the exact same direction that you intended on, right? So that's just a quick run through on the intraday perspective. So let's just stick to the higher time frames now, all right? So let me know if you have any questions in the comments, all right? In the chat, as I would say here. Great, so moving on to higher time frames on NASDAQ. This is extremely bullish, all right? This was your monthly fair value gap in this low, which I did expect price to get to, and it did, and it started pushing higher. So my bias for NASDAQ is going to be quite bullish as well. I just expect price to expand higher once again, and nothing more. I'm not really trying to capture the high right here. I expect a reversal structure to form, so something like that. And when it does, I will let you all know. But until then, just waiting for price to form the structure, right? So just expecting price to move higher for now and nothing else, right? Let's move to ES, and I believe ES is the exact same thing. We have expanded through to take out these highs. Once again, the same weekly structure, right? Price taps into your weekly fair value gap right there. Pushes higher to take out equal highs, right? So my draw for ES is of course going to be $8,000 because once again, I believe that's a whole number. That's really where price should get to. Let's move on to gold, and I am quite bearish on gold, right? So you all have seen this in the previous stream. I did expect price to push lower to $4,000 and have been calling for lower prices since then, all right? So the previous week, we did push quite lower, right? We did have a nice move lower. And even now, I'm bearish. I'm not going to be bullish here. I'm watching this exact fair value gap right here, okay? This fair value gap. And we have tapped that as well, once again. So I'm expecting price to drop down all the way from here to take out these lows, all right? That's just what it is, and not really going to change my bias. My bias is bearish. It has been all the way from here to this drop, retracement once again, and once again I expect the exact same thing. Okay, if price manages to close above this bullish fair value gap, probably close above these highs, then I could be tempted to change my direction. Although I don't think it would happen, I definitely do believe we are going to get to these lows. All right. So let's have a look at silver as well. I'm bearish on silver. So this is your change in state of delivery, which I outlined. And once again, bearish fair value gap. We had a really nice move here. So I do expect price to crash all the way to 57.965. All right. So we have just pushed lower, taken out this liquidity pool, retraced, and pushing lower once again. So I just remove that. We don't need this anymore. This is going to be our draw for silver, all right here. And let me just mark this out. This is where price should move to, all right? Now let's have a look at Bitcoin. And everyone's quite upset about Bitcoin not moving higher. Guys, it's not going to move higher, all right? We're going to push through to this low. $60,000. I've called price all the way from here, right? All the way from here, I've been bearish. It is going to move lower to these lows. You will watch it happen, and then you can come on the stream and just probably drop a like on the stream and nothing else, all right? I'm just here to teach you on how price runs, how price is going to move. I have nothing else to tell you all, all right? 50% of this fair value gap, that's where prices move towards, and it is going to push lower to this level, all right? Just watch it happen. Same goes for Ethereum, and Ethereum has moved quite beautifully as well. So weekly fair value gap, right? 1742 is the next draw for Ethereum, and we will move towards this low right here, which is 1383. All right, just watch this as well. Ethereum has been quite bearish, even more than Bitcoin, because you can see that we have not really tapped into these fair value gaps. We just kind of walked through the inversions in this buy model. So we have a buy model and this is a sell model. So in the buy model, we have just walked towards it and expanded lower. So once again, you can see here, we have just filled this bullish fair value gap right here. We didn't have any movement, right? You cannot just see price retrace, right? It did not retrace to, wait, just give me a second. It didn't even retrace to the premium of this range, all right? So this is really where you should not use the concepts just as it is, but you should establish a narrative around it, okay? So the narrative here is price is really bearish, right? And we have filled this bullish fair value gap here, right? The last one in this cycle. So you have this, in this range. So you have this low right here, and you have this high right there, okay? So the last bullish fair value gap is this one, right? There is no other bullish fair value gaps other than this. So price fills it. Sure, we can consider the small one, but I mean the large ones, right? Which have some sort of meaning. So here, here, and here. So price has filled that, right? Now, you would just mark out your dealing range, and you would expect price to get to the 50% to short, right? But that's not really how it is, because that would just be waiting for price to develop and then take a trade on. Now, how do you establish narrative is price was unable to get to the 50%, right? When it should have. And that means that Ethereum is even more bearish than we could expect. And in this case, we expect price to push lower to our levels quite more aggressively than we originally did, all right? That's how you establish narrative. So in the following week, I do expect Ethereum to crash to 1742 and to 1384, all right? Let price get here first, then we'll reevaluate if price wants to probably perform a retracement to the 50% of this range, or if it just wants to crash through it, all right? But the bias is going to be bearish for Ethereum. All right, so that is going to be the end of the stream. Hopefully you all learned something. Do rewatch this whenever you can. Go back to my previous streams, watch that as well. Everything is live. That's why I'm live streaming it, so that there is no funny business from either side. And let me just look at the chat if there's any questions, and then we can end the stream. All right, so there is a question by Gabriel. How do I confirm if New York session will make the high or low of the day? All right, there are a couple of things you can look at, Gabriel. So the way I teach it is, let me just get to NASDAQ. probably the 1 hour time frame, right? Okay. So the first thing you need to know is price taking out a higher time frame level, all right? So in this case, we have a beautiful example here. Price has taken out Wednesday's high, all right? So this is Wednesday's high. This is your first thing, all right? Always be aware of the higher time frame levels. The first thing is price has taken out Wednesday's high, okay? Now, the second thing is there liquidity in the opposite direction? So 15-minute time frame. So you have a 2-day open, and let me just mark out the ranges as well, so it'll be quite easy for you to understand. So we have Asia's range right here. We have London's range right here. Okay, and I'm sure you'll be able to understand this quite better with the ranges on the chart. Right, so right there, that's your London's range. Okay, now first thing is you wait for price to take out higher time frame liquidity, and price has done that here at 9:30, around 9:30, right? Around the equities open, around New York. Okay, 8:30 is where New York actually begins for futures to 11. So this range, all right? So price has taken higher time frame level. So that's the first thing you need to note. And the second thing you need to know is there liquidity in the opposite side? So in this case, we have clear equal lows, all right? So why does price leave these lows and move higher? Okay, so that's the narrative you have to establish. Price left these lows open, so it didn't really take these levels, didn't take this liquidity, it just expanded higher to take out a higher time frame liquidity, all right? So during this time, what you can do is you can see that given your London session, Asia session has been consolidating. And this just means that if you're following a power of 3, you know that it is accumulation, manipulation, and distribution, right? So you have your A, M, D. So we have accumulation in Asia, accumulation in London, price pushes in the opposite direction, leaving engineered liquidity here, or leaving equal lows here. It moves against it. So this is most likely to be manipulation, right? So we have accumulation, manipulation. So we can expect price to not take these bullish fair value gaps seriously because we have liquidity right below it. And we can assume that this high right here will be your high of the day. All right, right there. That'll be your high of the day. And that is really how I do it. Sure, there are other things we can get into on the lower time frames, but that is probably for another day. All right. So that's really how I would do it, Gabriel. All right. So that's great. Thank you for attending the stream, and do watch this again. And since that is all the questions that we have for today, I will end the stream right here, and we shall meet once again next week at the same time. All right. So do take care and stay safe. I shall speak to you all soon.